If you're watching this, you likely fall into two different categories. The first category is where you're starting off your journey towards building wealth. So you don't have that much savings right now, but you are working towards it. You're working to build some savings so that you can actually start using that savings to build more wealth. If you're in the second category, you do have a certain amount of savings already there and you're trying to think of ways to use that money to build more and more wealth. So either way, whichever category you're in, stay till the end of the video where I'm going to share exactly how you can invest and earn passive income regardless of whichever category you're in. So first, let me start off with some of the top financial gurus and what they're exactly saying when it comes to passive income. So let's talk about Robert Kiyosaki, right? The author of Rich Dad, Poor Dad. So he talks about, generating passive income through assets like real estate, stocks, and businesses. So one of the quotes is that the key to financial freedom and great wealth is a person's ability to convert earned income into passive income and portfolio income as quickly as possible. Let's take a look at Warren Buffett. So Warren Buffett again emphasizes the power of passive income mainly through the form of dividends and business ownership. So he famously advocates for making money while you sleep by investing in cash generating assets. So one of the quotes is, if you don't find a way to make money while you sleep, you will work until you die. Another thing you'll hear is that passive income, true passive income, does not exist. So famous people like Gary Vee has famously, you've probably seen the video where he says that no, this does not exist.
I have a question about passive income, and I want to know what kind of trends do you see for a person interested in that?
The quickest way to not be on a beach in Mexico is to think that passive income exists. Passive income looks like this. You take money that you can afford to go to zero, and you put them into two places that have historically created passive income. Public markets, that you don't care if it goes up and down and you just wait to the end, or real estate, and you hope that your real estate area doesn't get crushed. Everything else almost doesn't exist.
The passive income is basically, first of all, you have to work hard. So if you are in category one where you're still trying to get your initial savings, get initial hold of a certain amount of money, which will allow you to start earning passive income. So at this point, you can't be thinking of passive income. You should be working hard at this point of time in the best way possible and in the highest income possible in the way that you can. So whatever it is, whether it's you have to learn a skill, whether you have to take certifications, whether you have to just work, time for money and just get the initial amount of savings that you can to be able to eventually go into real estate and then, stocks, portfolios, where you would be able to earn a true passive income. I mean, a lot of the ideas that I see online when I did my research on this topic is weird things too, like just things which didn't seem very practical. I mean, they might be, but to me, it didn't seem like things like letting people park in your driveway for money, renting things that are in your house, like, I don't know, your printer, your bicycle, or just random things. Okay, it makes sense, for example, for cars, like two-row and things like that, but I mean, it was like basically just rent anything. Writing blog articles, things like that. There's creating digital products at one time. This was, it's still pretty big, but like planners, books, courses, graphics, things like that, so that you have passive income through that. And then other people talk about vending machines or things like, owning certain type of businesses which are very hands off. Imam Ghazi says something that really clicked as well, is that there's no passive income, rather there's something called leverage. So you're using, the first type of leverage is like using systems, like you build automation. So if you have a system, for example, like funnel, building a sales funnel, this would eventually help you to build a system, and that system would be getting you clients repeatedly, right? That's one way. Second form of leverage would be a team, like for example, having a virtual assistant or having contractors that are working for you, having cheap employees working for you, and then eventually having very high paid employees that are basically running your business for you, right? There's other ways that people talk about e-commerce, drop shipping, but again, there are challenges with that. One of the main challenges with drop shipping being that it's very hard to find winning products. So if you're able to do that, that itself is a skill which you would have to put your time and effort into to learning. So this is all for people who are in the first category, who don't have a certain amount of savings. And I would put this number, according to my knowledge of real estate, and would be about $50,000 is what you would need as a minimum to be able to start investing into things like real estate. Stocks is different, and I'm not a big advocate of stocks unless, again, you're going for funds that are, a big basket of stocks which are already picked, like the S&P 500, Vanguard, whatever. Those type of basket ETFs are of course, they have performed well over a span of 10, 15 years, 20 years. Yes, you can see an average of 10, 12% that they have performed on. So this is something where very hands-off, like you have $5,000, $10,000, where you just throw that money into those into those funds, and then you just leave them there. So this is something different. Now, what we are talking about here is a bit higher gains. Real estate can afford you a lot more higher gains, and this is what I wanted to explain to you. Now, when you talk to Dave Ramsey,
there's nothing passive about managing real estate. Nothing whatsoever. You want passive, buy a mutual fund. They'll just put the check in your mailbox and you don't have to think anything about it. But real estate ain't passive. It's very active. Even if you're managing the managing company, they've still got to call you and approve the $8,400 new heating and air system that blew up.
So this is, one of the, opposing points about, real estate being a form of passive income. Now, I want to actually address that in my offer here, in my explanation. So I would like to say that real estate is definitely a form of passive income, as close as passive income as you can get, apart from funds, right? So mutual funds. Apart from mutual funds, real estate is as close as you can get to passive income. Now my point is not like you have local real estate and you have international real estate. Now, local real estate can be down at a time. So when you talk about local real estate, let's say like in Canada right now, the situation is not very good. The interest rates are high. The down payments are very high. The housing prices have, skyrocketed, right? So we're talking like minimum 1 million plus that you're looking at to get into the real estate market, right? So even condos are going for like, 700, 800,000. People are looking in cold places like Alberta for investing in real estate, where it's like maybe like $100,000 cheaper or $200,000 maximum cheaper, but you're still looking at a very high price point. So this is when you would think that, what if I had a time machine where I could go back in time and maybe like 10 years ago, 20 years ago, where I could invest at that time when it was still, the area was still developing and so on. Right now, everything is like all maxed out. So what if I told you that you could actually go back in time and do that right now? And that is through international real estate. And if you ask me how is that possible? Basically, it's like you're going and investing in countries which are still developing, not developed countries. So developed countries like US, Canada, Australia, the UK, the United Kingdom, like Germany, like, European countries like Central Europe, let's say. So a lot of these places are already developed, right, to a certain point. So there's not a lot of room for growth. I mean, you may find here and there, but those type of deals are very hard to find. But if you look outside that realm, there's the world of international real estate, where you can have that option where you can still get in early, get those deals early. So in this way, you have very high growth potential, because these are emerging economies and that you can get significant appreciation in these type of markets. So that's number one. The number one thing is you have high growth potential. Number two is that you're diversifying. Let's say you already have a property or multiple properties in developed countries, right? In your own home country, right? Whether it be developed or developing, and even if it's developing, you might be facing issues. That country might be facing problems, turmoil, or regulation issues. And either way, even if it's great, if it's doing great right now, you still want to diversify. You want to invest your money in multiple baskets. So I'm not just saying just real estate, even put it, whether it makes sense to put it in gold, in silver, in precious metals, in commodities, in stocks, mutual funds, right? In multiple different areas. But you want to diversify, especially when your wealth starts to increase. You don't want to be having it in one spot. And this is what, all the wealthy advisors, financial gurus will tell you that. So by spreading your investments across different countries, you reduce your risk and you increase your returns. Now, and I'll talk about the pros and cons. I know what you're thinking, what are the risks and all those things. So I'm going to talk about that. And the other thing is that by investing internationally, you also have access to certain incentives, right? What are those incentives? So for example, you get tax incentives, right? For example, if you invest in the UAE, you have access to a golden visa, you have access to having your company there, you can actually set up a company in the UAE, you have very good favorable tax terms there. Basically it's like 0% tax. Recently they've got a corporate tax, but again, this is after you earn a certain amount. So very favorable tax conditions, right? Then you've got citizenships where you can invest certain amounts and you can get citizenship in many countries right now around the world, or residencies, or you can have your business bank accounts, so those type of things. A lot of interesting, attractive incentives that are definitely useful in this day and age right now, in the world we live in the changing world that we live in. It's always good to have that plan B. So now that we understand that, okay, there are advantages, I know there are risks too, and I'll talk about those, but let's talk about now, where should you invest in the international market? Where am I recommending for you to invest? So of course, the one of the top destinations are, for example, is the UAE, is Dubai. So this is very trending. A lot of people are investing right now in Dubai, and I think it is great. It's got great potential, great for cash flow, very reliable, very safe country. They've got amazing gold visa program. They've got amazing tax incentives. They've got amazing banking. So this is definitely a good place to invest, right? Again, there are some things that you might, in terms of the appreciation overall for a long period of time, you might not see that. But if you're looking for good cash flow, some good benefits, then UAE is definitely one of the top spots, I would say, right now. So the next one would be, I would say, is Bali, for example, Indonesia. And here, this is some of the, the most returns that you can see in the market right now. So appreciation, again, we can talk about that. But in terms of your cash flow, your returns that you're getting, we're talking like 15, 16, 17%, right? So Dubai probably is like 9, 10 maximum, even like 10 would be a bit tricky. So, this is something very different that you can get in Bali, right? So this is, again, a new area. Most people are not familiar with Bali, but, a lot of Russians are investing there. A lot of different people are investing there. And definitely, I think this is a hot spot for investors looking to get into the international market. And number 3, I would say, is something which a lot of people don't know about. So Dubai, Bali, these are still well-known spots. Number 3 is not a well-known spot, which makes it attractive because I've seen the potential by going there, by exploring. And this place is North Cyprus, right? So this is a very undiscovered, not much spoken about place for investment, but they've got very professional service. The construction quality is very good. The actual this is an island, so this island has immense growth potential right now. We're talking like especially for sea view properties, like waterfront properties. This is very limited. The prices are very good, and there's incredible expansion to come. So if you do have a few years that you're not looking to exit very quickly, let's say 5 years, so this is a bit more mid to long term, right? So I would say North Cyprus has incredible potential. And then last but not least, Turkey. Right now, Turkey is definitely, people are talking about it. It's not doing too well and so on. And, overall, when you look at it from that perspective, it's not. But from someone who's based here, from someone who has a lot of experience in the Turkish market, I would say that, you know, Turkey has potential. And even though the prices have risen a lot, but if you know, still there are, especially now, because a lot the prices have started to come down and the market has cooled down. So now is a good time for certain areas and certain different projects that you know, not everything, because there's still a lot of overpriced properties, but there are certain things that you can do in the Turkish market which would basically get you very good appreciation in the short term. Basically, I'm talking like, you know, within a year, within 2 years, you could expect very good growth in Turkey. So now let's talk about the negative aspect of international investing. So we're going to talk about, for example, the risk, the unknown, the language barrier. I don't know what's out there. How can I, like, you know, buy something there? How can I know if it's going to be ownership wise? I'm going to have ownership, you know, banking, transferring money, completing the sale. These are all types of questions that come to your mind, right? We've got like taxes, you know, income tax, capital gains tax, you know, closing fees, all these type of things. So these are definitely, you know, these are, of course, hurdles, you can call them, and it's not easy for everyone to jump over these hurdles. If it was that easy, then everyone would be doing it, and then you wouldn't be one of the few ones that would be able to get access to this. So this makes it hard to access, which is good in a way, because it allows only a few people to actually take advantage of this if it's done correctly. And once they've gotten access to this type of investments, then you can see that, you know, there is a whole wide frontier that opens up for you. So there's not a lot of people that can offer these type of services where you know, you can help investors from different parts of the world invest safely internationally in different markets. So this is something which I will be helping you with because of my experience helping investors right now in Turkey, in North Cyprus, now in UAE, and also expanding to Indonesia, Bali. So, you know, it makes it a lot easier when you have somebody who's doing the research, who's doing the vetting, who's doing and making sure that the network is solid, the people that I'm working with are solid, and making sure that, you know, you are in good hands. So what makes this very attractive is that, you know, again, I'm going to try to make it, you know, as passive as possible. Again, there's no real passive income even in real estate, but making it as passive as possible for you, so that way you're only involved in certain parts which are critical. So like major decision-making periods, especially at the beginning, we'll have to spend more time together, you know, just to give you more understanding, you know, for the trust factor as well. And then once we start getting you enrolled, then you can really start to see how easy it becomes, and how each property, whether it's moving properties from one place to another, whether it's selling them and then buying another location, or buying in different, diversifying in different locations. So it becomes a lot easier after that first step. So again, I would like you to, if you are thinking about it after this video, join me on a call, you know, join me, send me a message, send me an email, and, you know, we can talk about it. And if it makes sense, then we would, of course, move forward. Depending on your scenario, it would obviously change where, what, how much. All those questions will be covered once we actually start thinking about it, start discussing about it. Then those things will be covered. So again, that's it for today, guys. Remember, there's no passive income, real passive income, but the closest you can get is through real estate, through mutual funds. But of course, real estate has much higher potential to gain in the short and medium to long term as well, if you invest correctly, that is. So again, get back in that time machine. Let's take you back in time, where you can make the right choices this time and get you to double, quadruple your funds in the coming years to come. All right, have a good one. See you in the next video.